Okay, can you hear me and see me okay? Everything? Fantastic. So just let me check that we're going live. Okay. Okay, good stuff. Okay, good morning, everyone, and welcome to another episode of the Crypto Hour, Friday, the 31st of July. So we're well and truly into the third quarter of the year, and we're getting closer and closer to the to when the 4-year cycle in in Bitcoin has had its previous bear market bottom, which had generally happened at the beginning of the fourth quarter in 2018 and 2022. So every day that that goes on without any major drama is a good day. So in a way, kind of no news is good news. But let's take things one at a time, and let's have a look at what went on. First of all, in the everything again is being dominated by the war between the US and Iran. You know, one moment they are making peace, one moment they are back and bombing each other, and they're blocking the Strait of Hormuz, they're opening the Strait of Hormuz. So things are going up and down. And you might have noticed probably the most obvious thing has been. I'll just show you this before we're going into the economic thing. If we look at the what's that? I don't need gold anyway. If we look at the oil price, so you look at what kind of like they move both in kind of like daily moves and also intraday moves. They're going up and down like crazy. First of all, the prices came all the way down when things seems to be okay. Then at the beginning of July, they started bombing each other again, and prices went back up from, first of all, they came down from 110 to 70. Then from 70, they went back to the mid-90s, and now it's went back from 95 back to 85, now back to 90. It's kind of almost like changing by the hour with the news that we get coming into the that we hear about the war. Look at this. Even this is like a 15-minute chart. Look what a big move just in the last 2 or 3 hours. This is kind of like crazy volatility, like 2% move, and it's nothing major has happened. Over the last couple of hours, but we keep getting this quite you see from Tuesday, where we opened with a big gap because there were again that hostilities exchanged. So we went from 86 to 88, and now from 88 all the way to 95 over the same day. So that was a big, like 6-7% move in one day. 7 was that 6%, 6.2% from when it opened, but from the night before, there's almost 9%. I mean, this is crazy. If oil is using everything, production of everything, so I can imagine as a producer, either uses oil or whatever the byproduct of oil, like electricity, to produce things. It's very difficult to plan when your costs, a big part of your costs might go up or down by 8 or 9% in a day. So this is, I mean, obviously the price goes up and then it comes back down. It's not as if you need to buy oil every single day. You wait for it to be at the price that you want to pay before you buy, if you need to buy. But still, there is all this uncertainty and all this volatility that at the end of the day, just like an increase in prices over the long term. So it's not a good environment at the moment to to do business and to plan long term, because we don't know what's happening tomorrow, let alone 6 months or a year down the line. So let's go and have a look at the calendar for this week. So today is the last day of July. From tomorrow, a new month begins. So this week, what did we have? The biggest news of the week was the interest rates in the US. There was like before they were released. Obviously, can you see there's no change, remain steady at 3.75%. Before they were released, there was a 30% chance that they would rise interest rates, and there were like 3 votes to actually increase interest rates because the inflation is still not under control. So apart from that, we had inflation figures from Australia starting to decline slightly year on year, going from 4 to 3.8%, still very elevated. Again, the UK official bank rates held at 3.75%, but if you look at the votes, now there is like these 3 numbers. There's 9 members of the Monetary Policy Committee. The first number is how many members voted to increase rates, the second how many to decrease it, and the third how many to keep the rate steady. So the 6-3 was like keep the rate steady, the vote. So it was kept on the same, but there is an increase in 3 people out of 9 now are wanting to increase rates. So you only need a couple more to then start moving and increasing interest rates. Now, the Bank of England, like anybody else, faces the same problems. So they're trying to control inflation. It's the interest rate, the best way to control that, because it's kind of like a crude instrument, because you want people to spend less money, but it's not that people are spending money going out and just like spending it on frivolous things. Then people are spending more simply because things have gone up more because of oil prices again. So necessarily increasing interest rates, yes, it would stop people spending because they're really struggling, not because they are stopping for buying discretionary items that they can do without. Okay, another big announcement yesterday was on the another measure of inflation for the US, which is the PCE price index, which is the one that's used more than any other for the setting of interest rates. And I'll need to go in a second to the other to double check on the I only get month-on-month figure and see I want to see the yearly figure that we'll get somewhere else in a second. But today we also had the Bank of Japan that announced again keeping the interest rate steady on the yen at 1%. So we had both 3 big announcements, like US, UK, and Japan announcing interest rates, and all 3 kept them at the same rate. So nothing else really to weigh, and nothing at least of any importance to weigh for today. But I just want to double check this PCE price index here. Let's have a look. On to yesterday. Where are we? There we are. So the PCE price index, it's declined slightly in line with expectations. So it went from 3.4% to 3.3%. Still quite a bit higher than so this is the core PCE price index, quite a little bit higher than where they would like it to be. Now let's go and have a look at PCE price index month on month. Where is it? There you are. PCE price index year on year went down. This is the kind of the one that includes everything. The one before the 3.3% was the core one, down at 3.3%. This one instead went down from 4.1% to 3.7%. So again, in line with expectations. So, and this is part of the reason why I think the interest rates were kept the same, because the kind of the pressure from the interest rates that is being felt from business, and then so also on jobs, while at the same time inflationary pressures are pretty much built in the system because of the excess price of oil. And this is you see how economic reasons are now combining with political reasons, and actually used as a tool by Iran, for example. So Iran knows that a high price of oil affects the economy of all the Western world. So they can afford to play the long game because their economy is pretty much shot anyway. But the US, they can hurt the US simply by keeping the price of oil, high by having this uncertainty about the Strait of Hormuz. So then what's the target? Is that then they know that they're gonna have to sit at the negotiation table anyway. But both of the US and Iran want to be having the upper hand at the negotiating table before actually agreeing on the terms of hopefully what's going to be peace. And until that happens, we will still need to keep an eye on oil prices because then that they affect the rest of the economy. So this is the main driver of inflation this year. So you can see here in 2026, see where the price has been in 2026 compared to the year before. So this is 2025. Let's have it in. Oops. No. Sorry, in yellow. Okay, so this is 2025, and this roughly is. Come on, guys. 2026 so far. So can you see how the average price has been kind of quite a bit higher than it has been last year. Last year we had we started pretty much in a similar price where we were in 2024, and then in 2025 we had declining oil prices, so that would have had an effect on inflation that was deflationary. Where now we are at higher prices than we were last year, quite a lot as well. So that puts pressure on inflation, so put pressure then on decisions that were taken like were before. You see, if this was the way the market was going, can you see the direction of travel? Kind of lower and lower prices. They also allowed the lowering of interest rate because the inflation was considered to be more under control. Now instead we have the opposite. So this has been the direction of travel in 2026. Started down here, and we're now up here at a higher level than we've had at any time in 2025. Okay, so until this equation is under control, this would reflect in everything else with the stock market, the crypto market, and anywhere else, any risk type of investment where you're taking a risk to make a profit will be affected by oil prices. Okay, so now let's go and have a look at then what we were talking about before, kind of like where are we? Actually, before we do that, let's have a very quick look at so the same uncertainty, how it translates on the stock market. So we use the QQQ and the SPY, they are kind of like the equivalent. So they are the ETFs that represents the S&P 500 and the NASDAQ. So let's start with the NASDAQ. So you can see here in the chart how there is now uncertainty about the future direction of travel, and all these investments that need to be made by technology company, to get to that next level of AI, to the next level of products that we will need to use in a few months down the line. There's now uncertainty because nobody wants to invest when you don't know what the overall conditions are going to be in the future. So we see here from beginning of June that we've been pretty much holding pattern, starting to point downwards. We're now broken through that level that we're talking. This is a weekly chart, so we're talking about this last Friday. I think where are we going to end up? The week finished pretty much on on the previous low. Let me go on to a daily chart only to get a little bit more detail. Okay, so you can see at this point represented the previous low. For a market to be in a downtrend, we needed at least a daily chart closing below that, and we had that yesterday. So now we have two trends in the market at the same time. So this is the big trend, which is the uptrend that was, all the way really from 2022. Okay, or if you want to consider that, this was quite a significant drop. So probably it was interrupted here and then restarted in April of last year. Okay, so from April of 2025, we have had a year and a half almost of growth, and from the bottom there, we went up at one stage 87%. We're sitting now at about what's that number? We're sitting now at about 71% growth in a year and a half, which is remarkable, for the stock market. So a correction is expected, and it's normal to be expected. But we have this trend, which will not be broken until we go below 555. But now we have another trend coexisting at the same time, which is a downtrend. We just had a this pattern that you see here, this M that just formed, we just printed in the chart, is what is called a reversal pattern. So, and the confirmation for that was this closing of yesterday's closing below this point. Okay, so we have now a budding downtrend that is with a much larger uptrend. Where this will end up, if this will be just a correction in the bigger uptrend. But even for a correction, I would expect it to, even if we end up going higher, to touch this area. This could be another 6-7% drop from where we are right now. Whether this happen or not, we will see. But if there is any serious downtrend, he would hit when we actually get below that level, which already would be a significant drop from where we are right now. But over as a multi-year chart, that would be indicative of a much deeper correction. So you see, we'll need a 20% drop to break that trend. But if we do break it, then we could end up touching all the way down to 2025 levels and below. Okay, because then the downtrend will be the dominant expectation, and also panic would also start setting in, because there are in this price move, like at a 70% plus price move, there are a lot of accumulated profits. Okay, and so there's a lot of people, if you see your account has gone up by 7% and you see they start dropping, at some stage you will defend a position and thinking, you know what, I don't have 80% in my account, but at least I want to make sure that I keep a 50% gain. And so at a certain point you're thinking, okay, I'll close everything now, I'll wait for prices to get lower, and then I'll buy again when it gets lower. But at the moment, I'm just stating facts. We have two trends coexisting in the market. The uptrend at the moment, you can see by the inclination in the charts, the uptrend is definitely the stronger one of the two. At the moment, this still looks corrective in nature, but then it doesn't take a lot for things to start tumbling. Okay, and when if we start having a couple of like red days, like kind of a dip like this one, where price can come down by 4 or 5%, then panic can set in, and automatic sell orders may start appearing straight away. But it's interesting to see what I've used here. Can you see here on the left? I put a simple moving average of 260 weeks, which is 4 years. Okay, So if we have a 4-year trend, look at that, how far away we are from the average price of the last 4 years. So that shows you how overstretched the market is that we are at the moment. If we measure from the 4-year average, we are 56% above the last 4 years average. Okay, so it shows you that, you see, from when we almost touched back to that average, which was on October 2022, we are now, you can see that the actual distance from the average has actually increased rather than decreased. So, although it seems like a long way, you can see there are some stages where the market does get closer to, because all prices in the end do revert to the mean. Okay, so this was the last time that we were anywhere near the average. This, we had this correction here in March, April, but it didn't really take us that close to the average. But so from where we are now, it will sound shocking. People will talk about the end of the world if we were to drop 35% in the Nasdaq, but it would be from a long-term view, it would be just par for the course. So there have been very few cases where you can see we have been under the average. So in the last, from 2004, we've just been really for a few months following the great financial crisis 2008 is when we have been below the line. From then we had almost like we're getting close now to 20 years of unparalleled growth, pretty much from 2008 onwards. So if we use that as well for Bitcoin, let's have a look what that takes us. Go back to Bitcoin. Let's move this up a little. And let's go to the weekly chart again on Bitcoin. Okay, so look at this. Isn't it interesting? There are two things to look at. Okay, one is this. And the other is this one here. Now, this is almost seeming like I haven't drawn these things on purpose. Okay, in the sense that these averages, it's not like just like I come up with it and I find the one that matches the chart. But you were talking last week about how the pace of the price decline has slowed down. So you can see this as in 2026, we have actually broken this trend line that was going from October last year when we created the all-time high, and prices started declining. So this is where we start to see a budding try to get back and start another uptrend, and then another move down, but it was like a timid move that just about went a little bit below the previous low, but not by much. Okay, and now it's interesting to see where. So if you look at where a move stops, where is the lowest one? It's this candle here, this green candle here. Okay, so this week we had the lowest point in Bitcoin, which was 57,800. At this point, the actual average, the 4-year average of price of Bitcoin was 57,350, and that went to 58,000. Was the low was 58,000? Sorry, 57,800. So really within a few $100 or the multi 4-year moving average. And also that point I here put here, it's another point where the two lines were intersecting. Now the long-term trend line, which actually I can move slightly. It was wrongly drawn. Sorry, apologize. Let me do it properly. Okay, so the intersecting of these two lines again, it's like the long-term average and the downtrend trend line that they've started to again to mix. So you see one, two, almost like three things they are pointing to the same level. Okay, and at the same time we have another indication here, which is the you know, the last time when we had big move a big move up in 2024. Okay, they had a really steep increase, and with prices going from, you know, about 50,000 to 110. And so there's kind of the price memory in these moves as well. And this was the point, you know, at which the market turned around. Okay, when it started growing. So can you see how there are like all of a sudden there are all things that converge on the same point. So it's uncanny. Obviously, it's not an exact science, but when you start looking at things, start finding, you know, things that they are pointing to the same point, it's just like it should start making you think. Okay, so one thing is like the turnaround. So Bitcoin can be used as a proxy for the whole crypto market. So this is the moment in which we're starting to see a shift of capital between other markets to to back into crypto. And the other way to look at this is that if I put sorry, if you put the Nasdaq here in the same chart, now can you see how where Bitcoin held its price and started actually growing slightly, the opposite was happening in the Nasdaq. So this is almost to tell you some capital that has had during this time here, which was where the launch of SpaceX really started to move out, to be invested in kind of AI and the SpaceX IPOs. You know, all of a sudden now is coming back into crypto a little bit at a time. Okay, so this is from one point of view. The other point of view is that, okay, how do we see if there is any movement as well in the anything else that's not Bitcoin in crypto? Okay, something like the rest of the market. And the biggest token that we can analyze that can represent the rest of the crypto market, is like the things that Bitcoin cannot do very well, like the programmability. That's Ethereum. So if we look at the relationship between Bitcoin and Ethereum, that tells us as well if there's starting to be more of an interest in altcoins, that could point at a closeness to the moment where there is like an altcoin season, and it would also coincide with another push up in the price of crypto overall, and including the price of Bitcoin. So we can have a look at this chart. This is the Ethereum Bitcoin chart. So this is completely taking away any reference to the US dollar. Okay, so that's the relationship in price between Ethereum and Bitcoin. So this is the price of Ethereum in Sats. Okay, Sats are the minimum denomination in Bitcoin, which is like 1/100000 of 1/10 of a million of Bitcoin, I think it is as well, like one preceded by 7 decimal points. Okay, so you work it out, and so that tells you how much one Ethereum is worth in Bitcoin. So I can tell you here about at the moment is about 0.003 Bitcoin per Ethereum. Now, if we look at the relationship in price of Bitcoin, this is all the time from the creation of Ethereum. So it starts actually a little bit after that, but from all the time from August 2015, okay, where the relationship in price was about 0.01. Okay, then during the 2018 boom, this went from 0.01 to 0.16. Okay, 15 and a half, you can say. So that would have been a good time to have Ethereum rather than Bitcoin in your portfolio. Okay. Because it means at the end of it, you could have sold in a go like 6 to 15 times more Bitcoin than you had at the beginning of that. So, but it's, yeah, if we could go back to February of 2017, with a time machine, you know what to do. Okay. But ever since then, you can see there has been like a multi-year trend line in a sense that the price of Ethereum in Bitcoin terms has kept going down and down and down. Now, we are getting now close to the point where we might be actually interrupting and breaking that trend line in the next few weeks. So we had a push over the last. This is a monthly chart, okay? So maybe we'll put a little bit more definition here on a weekly chart. As you can see over the past few weeks, and really from the beginning of June, we're starting to see a revival in the relationship on the price of Ethereum and Bitcoin, so that Ethereum can be used as a proxy for the rest of the crypto sector, excluding Bitcoin. And it could be like a really good idea, especially if we manage to break this trend line, which in a few weeks time will be around 0.32. At the moment we are 0.296 in Sats. If we manage to get this trend broken, it could be again the beginning of a reversal of the relationship between Bitcoin and altcoins. And altcoins start going up in Bitcoin terms only when some belief creeps up into the crypto world, and people are thinking that they can make big profits by holding other coins rather than Bitcoin because they're starting to grow a lot faster. So this is, again, it's a good sign. It's good to see. It's not enough yet, because again, we want to see, this is from August of last year, is a succession of lower lows and lower highs. Okay, can you see here? Okay, so what we need to see to a confirmation this is really happening, and we're not just imagining it. We need to see at least breaking one of these previous highs and having actually at least one higher high, and then potentially it's followed by one higher low, and then followed by another higher high. So that's the move that we'll be expecting to see to have confirmation. Oh, why can't I draw on this thing? Okay, so that's the kind of move that we'll want to see. A confirmation that this relationship now is changing, and that could be almost like the carte blanche, I would say, to start generally be expecting some good times to come for the overall crypto market. In terms of timing, again, when we look back, let me just get the Nasdaq away from that now. So in terms of timing, so we can see here the last time we had a low was beginning of November 2022. Previously, it was end of November, beginning of December 2018. Okay, so if we can, what happened? Let's go and have a look at those times. So you see, in the past, we still had, although the price had gradually come down, we still had that sharp drops before the market started recovering. So that was the December 2018, we hit the low of 3,150. But even in, a month before, we were up double that amount. So we still had sharp drops in the period that from where we are right now, let's say in July, August, to where the bottom of the market was. It was 2018. That was still a very, very early crypto market, not quite developed as it is now. But let's go and have a look at the 2022 low. Okay, same here. So when you look at this period, so this is like beginning of November when we had a sharp drop. So in end of July, we were at about between 19 and 24, and then market going sideways really for until the end of October, sharp drop to 22, and then that's the reversal. That's the reversal pattern that we see in there. Okay, the W, sorry, my squiggly lines, but that's the W moves that we see. Sorry. I'm trying to do a decent drawing for you, I can manage it. Okay, another time, don't worry about it. So, but anyway, this is the pattern that we're talking about, the W, that then we have a retest immediately. Yeah, then in December, and then boom. Okay, so the start of the current, the previous. Can you stop doing this, please? Okay, the start of the growth went all the way from November 2022 to October 2025. So potentially we have like 3 years of growth. In this case, we saw a drop of about 20% in 2022. Previously, we had a drop of 50% in 2018. So, if we were to have a 20% drop from here, and I expect to be, so let's measure the drop, actually, the last drop in 2022, because the things are obviously, as the market matures, these drop are getting smaller and smaller. But if we go here from, where are we? Beginning of August 2022 to the low, that was 33%. Okay, previously was minus 50% and minus 33% in 2022. And if we could take it to the current move, so I would say like maybe like a potential expectation would be that a 20% drop from here. Well, it pretty much will take us to, will still keep us pretty much in this demand zone. A 20%, this goes down up to about 18%, 17.5, 18% drop from here. And so that again, you can see they're combining with different factors that are pointing to the same, pretty much to the same spot. So nobody knows if we already hit a low here, which could be because things change. We had December in 2018, beginning of November in 2022. So who knows when the low will come in this cycle. But the important thing is that let's not focus too much thinking if the bottom is 57 or if it's 55 or if it's 50. Look at the other part of the equation. Okay, so we go in here from November 2022, pretty much November 2025, October 2025. On here, we're going from December 2018 to November 2021. So pretty much in both cases, we're looking at 35 months of growth in prices. So you're thinking, is it a good time? Maybe if you want to just, follow the 4-year cycle, is it a good time, or at least will it be a good time in October, November, or any time around between now and then to buy crypto or not? Historically, the answer would be yes. And the kind of the expectation to be had from there would be obviously a kind of a lower amount that we've had in the past. Okay, so we look at the two cases before. And obviously I'm just doing the extreme, but it's impossible to capture the exact extreme. Okay, but we're looking at in 2018, 2021, it was like 2000%. In 2022 to 2025 was 700%. Okay, so if we had to have, let's say, probably about half of that, oops, I can't even reach. So let's say around about 350%, which would be half of the move that we had last year. That would take us to about 250,000 by the end of 2029. Okay, if we were to move a bit lower, like to the low 50s, let's say, then that would take us to about 220. Okay, so this is where I we start speculating, obviously. This is what the expectation that I have, this kind of moves. Now, if we translate that and we do the same thing for the altcoin market, this will be the expectation that we can have. Again, 2018 to 2021, that was like an 8,500% move. Okay, crazy. 2022, 2025, 547%. Okay, but in this case, it didn't even hit the previous high. But the expectation would be, I would say, to repeat at least this move because it wasn't that impressive anyway. We haven't really got an up move during this cycle that's we're talking about. But that could mean, so for me, the kind of expectation would be to quadruple on average in all coins from where we are right now, where in Bitcoin terms would be to at least treble the current level, so around 200,000 and maybe a little bit more. In this case, it will be like 5 times as much, going from where we are now, which are actually more than that. Sorry, we are now at about 161 billion, and ending up at about 800 billion or around that figure for the rest of the crypto market once we go back above 4 billion overall for the total crypto market. So that's my kind of numbers and expectations for the past 4 years. I'm thinking, it wouldn't be a bad strategy to start doing some dollar cost averaging right now if you have funds that are waiting to be invested in crypto. On any of the crypto coins that you want to purchase, as long as I would just tell you, just focus on big and established projects rather than trying to hit a moonshot. But they will kind of be my expectation that you could do extremely well over the next about 2.5, 3 years with investing in crypto from now until pretty much until the end of the year. So if I say, if you had to buy a certain amount of either Bitcoin or other crypto coins, like the same amount, like once a week, a little bit, instead of buying it all at once, you buy a little bit every week, then you will get an average price over the next few months that will represent a period when the cryptos that you are buying were historically very low. Okay. Now, just a couple of things to share, and then we'll go and stop the presentation. But now this is kind of like a huge news. Okay. Now, Samsung Electronics, obviously maker of phones and electronics and tablets and televisions and everything else. They're now introducing native stablecoin support to the Samsung Wallet. So imagine kind of the same thing that you go on your phone, it could be on like your iPhone or your Samsung phone. If you have your card, for example, stored on there that you can tap when you purchase anything. Now you could have your stable coins loaded on there. So you could spend directly your stable coins without having to go through a crypto card or something like that. You could spend stable coins directly from the wallet on your phone. I mean, that is a big there isn't a date yet when this will be done, but they have demonstrated a mock-up of a Samsung wallet that displaying USDC. Okay, they haven't confirmed a launch date, what blockchain network they will be using, or which one it will be their official stablecoin partner, which is going to be USDC, USDT, or USD, or whatever other stablecoin they decide to use. But they already support major cryptocurrency, including Bitcoin, Ethereum, Tron, and Stellar in that. So it's kind of another step in the right direction. So as we can see that, this is again, it's not full crypto payments quite yet, but it's the crypto, what's that, opening door to crypto. It's something that they can understand easily because it says the same as spending US dollars pretty much, but that opens the functionality then to start making and taking direct crypto payments. Okay, and the other thing is kind of like almost like a important as well to notice. It's this shift from speculators to long-term holder in Bitcoins. So STH stands for short-term holders. The share of the realized cap in the market of Bitcoin fell to 23%, which is a multi-year low. So that means while the long-term holder share hit 52%. So 52% of the Bitcoin supply now, it's on the hands of long-term holders. And generally 23% are the speculators, that the people that just hold Bitcoin for a short time to make money. And again, it is like a bullish sign that it is kind of the strength in depth in the Bitcoin market. And the last thing is just like a slight worry in the sense that we're all using AI today. And kind of like Anthropic, which is the company behind Claude, that should do an IPO pretty soon, finds that Claude gained unauthorized access to 3 organization system. Now they were testing on a closed system, so it was thought to be without internet access. So they testing that, asking Claude basically to be like a hacker to break into this platform to see if they could do it. But what they didn't realize actually, there was like by mistake they have misconfigured the live internet access. So this had access to the internet, and it really broke into the system for three organizations. So it shows you kind of like how careful you need to be, because these things are really powerful. And you need to be very careful about the instructions that you give them and what you ask them to do, because they can actually run away from you, and before you realize it's a whole lot of stuff has happened, and whether you think, well, he did it, it's still your responsibility, okay, because it's happening, on your account, on your system, etc. So be careful what you wish for, but be because this thing is becoming more and more powerful by the day. Okay, so I think I've done for today. Far too much talking. But anybody wanted to contribute or ask anything? Anything that's topical for this week?
Well, mine's not topical for this week, but how do we protect ourselves against AI?
Oof.
I mean,
That's
to me,
that's
I'll be honest with you, it's the ultimate big brother. And
well, you have a
there's no
stronger
one can
AI
stop.
with an automatic rifle that can shoot anything they
Well,
want to.
yeah. I mean, I because wasn't there something that somebody was doing something and it went out of control and they couldn't stop it. So, I mean, those things where we're talking about, Terminator many years ago, but the machines, hello guys, are we just falling into that? You know, and without there's no controls. I mean, I've just been thinking, well, do copyright infringement of our data and our physical integrity because people are copying it. So how do you know what could be down the road? How do you know what's real anymore? And
Jonathan,
I
would
think
you
it's a
like to
real
take
question.
the
I don't
answer
think
to
it's
that?
that far. Huh? Sorry?
I say, Jonathan, would you like to answer the question?
Yeah.
That's more a you question than me question.
Well, yeah, if I could, I probably wouldn't be sitting here still. It's yeah, I don't know, Kim. It's very difficult. The advantages it's bringing and the power that it's putting into the hands of everybody rather than just the guys at the top is like nothing we've seen before. So, on one side you've got the progression of humanity side of things, which is move us on much quicker, and democratizing access to knowledge much more fiercely, just like the internet did. Now we've got AI doing it as well. But on the other hand, you've got exactly the same risks, access to dark knowledge and you know, powerful tools that can go and do things, nefarious things, more quickly, very difficult to prevent. It's an arms race in
Yeah.
technology, always has been, really. I mean, the difference is that we've been through high risk change, consistently for, I don't know, the last 100 years now. And so far, I mean, we've come very close to it. So far, we haven't killed all of us.
No,
But
no, no. But I just see, with the way it does is how do you protect your identity? That people aren't going to be able to somehow go, use it to go and get you hooked up with debt, because they can copy your credentials and your things. So where's your protections? And where's your protections of your identity, of what you look like and your data? So,
Mhm.
I mean, there's, what I'm saying? So it's supposedly all thing, but I don't think it's as safe as everybody leads you to believe. You know,
Well, yeah,
yeah, I
I
just think
mean,
that part of it. Yeah, it could do everything fast, but I think it's putting power out there that shouldn't really be there.
yeah,
I know that
yeah.
sounds really out there, but hey, look at how far we've come. You know,
No, you touch on exactly the right points, because the problem with it is that our existing storage mechanisms, particularly with identity, our existing storage mechanisms and methods of working are completely flawed, and they always have been. It's just we haven't had anything that has been bothered about or capable of attacking that en masse now. Now it's in the hands of everybody. So we're not just relying on MPs leaving CDs of personal data in the backs of taxis. We've now got, yeah, everything online. We've got AI able to go and interrogate it all. So we need to shift our thinking from preventing the AI, because that's out of the box now, to improving our systems. And one of the most powerful mechanisms for storage of data, particularly identity, and preventing the leak of information is blockchain technology, which is exactly what we've been investing in for the past 5 years. Cryptography is the only way that we can slow down the spread of information. And if you look at things like the Midnight blockchain, which is a privacy based blockchain, it is creating structures of data that is quantum resistant. So not AI can attack it, not post 2030 computer systems can crack it. If we put our data in there, in those systems, and we're holding the keys, then we know exactly who accesses that data and when, because we've allowed it to, as opposed to the other way now round, which is you've got your health services and your governments holding the data in these legacy systems, which aren't quantum resistant even. And so, yeah, it's a matter of upgrading and racing to get everything upgraded before the cat's out of the bag and it's too late. But yeah, at the moment, our personal data is the high profile target because it's where most of the money on the internet is generated is personal data. If you have access to marketing lists, you have access to the eyeballs of every human on the planet almost, and you can drive their spending decisions. And again, with AI, you've got that improving the ability for human manipulation through, your inbuilt physical wants and needs that every human has, and it can respond to. So yeah, I mean,
yeah,
we've got to upgrade. We've got to move to blockchain for everything. Storage in private systems that we control as an individual rather than it's centralized.
By the way, I'll give you guys a little tip because, like, you don't know when you're talking to somebody that you haven't met before on Zoom, for example, you don't know if it's a real person or not. Because now the AI is so good that can replicate somebody else exactly to the voice. I think the one thing that's really still difficult to replicate is hands movement. So if you're talking to somebody and you notice something funny about their hands, that's probably an AI clone. And I'll tell you why, guys. This is like a personal knowledge, kind of like I've got somebody that I know, a friend of a friend, is like he teaches AI related to video production in Italy, and he'd just been asked by a famous TV presenter in Italy, being asked to clone them so they can use the clone for advertising. So cloning exactly what they look, the voice, the movement, the intonation, and this clone is so perfect you couldn't tell the difference. So it can be that. So she still wants to do kind of live events in person, but to use this where she doesn't need to be there, like advertising and things like that, they can use a clone. She doesn't want to be bothered with that. This is already present in the near future. You have clones. They actually do television programs, from start to bottom. So you don't need to be there. So you'd see when you start seeing somebody that over 10 years, how come they always look the same? They're not aging. Probably, you know what's going on. But anyway, guys, it's the 10 o'clock, so we'll need to close it here, call it a day. But I would say, guys, every week with no dramas, I think is a good week. So let's see what happens. Let's see what happens next week. But any week that we're getting closer to October, November, I think will be without massive drops. I think it will be a brick in the right direction, and then we can look forward to about 3 years of continuous growth. Okay, so have a great weekend, everyone. Jonathan, I'll talk to you later, and enjoy the sunshine if you're in Europe. If you're in Australia, just put up with the cold, and won't last very long. Okay.